Welcome, everyone. I'm Greg Schnell, the Canadian technician, here to host the Market Buzz. This show looks at weekly setups across the U.S. market. Using the tools available on StockCharts, we'll look for long time frame trades. Please subscribe to my articles and Twitter feed for regular updates. Well, the Market Buzz has become the Market Drudge this morning. We are progressing lower, and we pretty much have a rollover in progress, and a lot of charts are breaking down, so I called it chart attacks, but literally there's some significant breakdowns um, that are showing up. And I think, for those that have followed me for the last couple of weeks, where they were probably thinking I was a little bit more bearish than I should have been, this was the kind of thing we were expecting to play out. So what we had was this is the NASDAQ advanced decline lines. And really simply, when you can draw pretty firm trend lines, it's a good place to watch. Now, the small picture is that we broke this trend line. The big picture is that we broke this downtrend, and what we see at major topping structures is this type of negative divergence. So not not a week or a month type of divergence, but this is year long. And when we go back and we see these big divergences, this is a problem. So all through the last 2 weeks or whatever, we've had the large tech stocks reporting, and Microsoft was blowout, and Amazon was big, and Google was a blowout, and Apple was a blowout. And look what we did on the index. We barely made any new progress. And so that's been a clue. And then the second part of that clue has been, almost no euphoria on the advanced decline, even in the face of these massive tech earnings. And some of the bigger stocks that have been popular, like PayPal and those types of things, have rolled over. So I'm not surprised. I don't think we should be surprised. But one of the things we want to keep in context is the larger picture. And what I'm particularly worried about now is that larger picture. Okay, so this is the the NASDAQ net new highs. And as you can see, we're down here around minus 100. And again, I just want to I've shown this chart so many times, but I think what's important to understand is that this isn't just 2 days of news. This is the fact that the market's been setting up for this period for months. And now all of a sudden it's starting to play out. So what we see here, again, back in 2014-15, was that the market really couldn't get a lot of net new highs going. We had enough to kind of make an advance, but it wasn't like the 2017 advance that was a ribbon higher. It was, fits and starts. And then in 2015, we actually moved up. But look at how kind of slow or flat we moved up, and then we got into the S&P topped in May, and the NASDAQ actually went on to make a little bit higher high in July. But the problem was we were losing strength as this was happening, and so now we have this pullback in net new highs. And so again, even if it rallied back up for a few days, I'd be more worried that we're starting to lose the confidence of the market again here. Okay, so here is the New York composite, and what we can see is it's breaking down through the trend line, and I could snug this trend line up quite a bit more, but whatever. I put it on the worst case scenario, and it's still poking its head down. We have broken this big uptrend line, and there is a flatter trend line that we could use for the advanced decline line. So maybe we'll see if we get down there and get any sort of a bounce. But the big issue for me is we haven't been able to break through. And when we get that non-confirmation, so we had the S&P 500 hit a new high, we had the NASDAQ hit a new high, but we didn't have the Russell hit a new high. We didn't have the New York composite hit a new high. And so those have been worrying statistics. Now, the one thing that was positive was this New York composite had a higher high on the advanced decline line. It's still breaking its trend, but as you can clearly see, since the rally has started, each bump up is smaller than the prior bumps. And so what we're starting to focus on now is that we're breaking this 6-month uptrend. Okay, from the high lows on the New York composite, this was a much more bullish showing. So, if I was trying to tell you what was going right about the market, this would be the chart I'd be highlighting. But we're still not getting the euphoria on one side of the market, mostly the Nasdaq side of the market. This side has behaved better. Now, um, on this side, there's also a lot of stuff on the New York Composite that might be causing this. I still think it's bullish to have this chart, but again, if you're waiting for everything to line up, it usually happens right at the bottom. So here's the advanced decline line for the um, for S&P 1500, and again, this is Arthur Hill's idea to use a wider measure than just the S&P 500. And this uptrend line right here, very close to breaking, and it's an end of day update, so we'll wait for tomorrow for that. But I do want to get through and show you some other charts. The Canadian market is one that I think is important, and I feel like I just did these last week, but the whole idea is to show you how the market progressed and rolled over in a continuous series of events to show you how the market breaks down. So it's not that I like to keep repeating these charts. I just want to show you how they do break down. And what we saw on the Toronto stock market is we couldn't break out to higher highs. And again, weaker markets usually break down first. So here we are making lower highs over here. We've now broken this uptrend line. And again, I just feel like the market wants to go lower. But the bigger issue for us on this Canadian market, let's just crush the tape here, put in 15 years or something. And what we're watching for is this, we can't break out to higher highs. 2015, we had the same thing, and I've shown this chart a few times, but the main thrust is when we get these market breakdowns and we start to see the advanced decline line not making higher highs. The Canadian market is a pretty good one because it's smaller than the US and doesn't have the software sector that is doing so well and carrying so much of the load for the US market. So my main point would be, we continue to have these lower highs showing up here, and that's just a problem. And now, if it was going to break out to higher highs, that would be helpful. Unfortunately, that's not kind of what we're getting. So, okay. So now let's go through and look at some of the specific charts and just talk about what's going on. So we mentioned that during options expiration, this is probably a good time to just watch and see how the market behaves. And we were waiting for kind of the Fed meeting to follow up after that. So as we come through here, basically just jogging sideways, even though the big tech names are reporting, and we didn't really have any push to the upside. This is the Nasdaq 100 down here, the S&P 500 up at the top, and all of a sudden these charts are starting to fall away. Now, while I will agree that part of the news was the Trump tweet and part of the news was the Fed meeting, again, a couple weeks back, I mentioned that if you go back and look at 2007, it was only a couple weeks after the Fed did its first interest rate drop that the market started to top out. So here we are, really, let's just call it the same day. But, my black lines were interest rates going up. My blue lines were interest rates unchanged. And here we have another addition, but in this case now we've started the decline of the interest rates. And what we see is a huge volume spike up here, market breaking lower on the back of a Fed meeting. And, it's not uncommon for Fed meetings to mark tops on the chart. So just be aware that we kind of set ourselves up for that again. Now, mid-August, we'll have the Jackson Hole meeting, roughly the 20th of the month. And so on that, maybe the Fed can walk back some of the commentary and do something like that. But to me, it looks like we've got some time in here. But I think the bigger issue is what's going on in the foreign markets. And so I'm going to cover that off a little bit. Just monthly performance year to date. Obviously, we're now down on the month. So market moving quite quickly to the downside. And on the big picture, this is year to date, and we had an uptrend in May, this pullback in here, and now this uptrend is starting to crack. And when this, the problem is now we're starting to break through that prior high. So we would have liked that to have been support. So we'll watch for the end of the day and see if we can rally back up there to try and hold that going into the weekend close. But it's that kind of thing that we'd like to see. One of the concerns I have is when you start to actually have the regular market breakdown, it usually, if it's just a pullback, it doesn't move down as quickly. But when the market finally gives up, then actually you can have some speed to the downside. So we'll keep watching to see if that happens. Now, Here's the horizontal resistance for the S&P 500, call it 2950. We didn't hold that, we're at about 2925. And up here for the NASDAQ, it was about 8150, and we kind of flew right through that. And on the Russell, we never did break out. We were sitting here. So resistance kicks in once again. We have an uptrend line that's now snapped on the Russell. Again, I want to go over to these other charts here and kind of just show you what's going on, and let's just update them so they're live. So on the left is the NASDAQ ETF, NASDAQ 100, and on the right is the SPY, which tracks the S&P 500. And what we're seeing, it's not so much the intraday, I mean, that's part of it, but the bigger picture stuff is that if we draw a line across the top of these peaks for the S&P, we literally got right to it and then fell down. We can see that momentum's been making lower highs since middle of July. And same thing on the PPO for the Nasdaq. So we've had slight drops in momentum showing up, but now it looks like we're going to go down and test this zero level. I actually think we go down farther. But when we get to the weekly chart, one of the things we want to talk about here is our PPO momentum got up to this level, hit, pulled back, and couldn't make it back up to the same level, and is now starting to fall away. And we're going to cover these charts in a little bit more detail in just a second. But the main trigger to be aware of is, again, this lower advanced decline line that continues to show up. And so as this market rallies, the rally, so we had a huge run, right? Then we had a pullback, another run, couldn't make much headway, a bigger pullback. Then we tried to rally again with a small pullback, and now rally again, and not much time in this one. So the market seems to be losing its enthusiasm. And I think as we work towards trade resolution or whatever, maybe that's a point where we start to get bottoming price action in here. But the rest of the world charts are really starting to get concerning. And I think one of the things to just be aware of is as that breakdown happens, and let's just update this chart. Okay, so on the right is the Russell, and on the left is the XGD, which is the gold miners ETF. And it broke out above yesterday's high. Now it's got a little bit more to go to break out the July 22nd high. But again, if this is going to take off, I think that'll be very interesting to watch. And one of the reasons I say that is, clearly it broke down quickly, then had a big reversal, and now it looks like it wants to try and test this top of the limit. If the US dollar is going to keep soaring, and I don't think it's not, I think it is going to keep running. With that, that's probably going to be a harder environment for gold. So keep watching this and just see if it can break out. But again, the weekly chart suggests gold could go much higher. Everything's kind of in bull mode here. The reason that I was starting to worry about it was this relative strength was getting it had moved to higher ground, but what I wanted to see was whether or not gold could handle the breakout in the US dollar, and it looks like it's going to be able to. On the Russell, what we see is this is pushing up, but the problem I have is right here on this particular chart, and we're going to just zoom in. I'm going to put on the zoom thumbnail, which gives us the little box on the right-hand side. And what we see here is this first of all, outside bar in a big way. So last week was an outside bar. This week's an even bigger outside bar. And you can see the full stochastic rolling over, and it didn't make it all the way up to 50. That's a pretty bearish signal. That's cautionary for sure. But what we see down here in the bottom is that this PPO was higher in May, pulled back, and then had no real strength in June, July, and started to break down. And what we're watching for is, do we end up closing negative on the signal line? That would be one thing. The second thing is, does it actually cross below zero? And if it did cross below zero, so again, we're on watch for next week. If it does cross below zero, what we're worried about is whenever the NASDAQ or whenever the Russell goes below zero, that's a pretty timely signal on momentum, and we want to be very aware of that as we go forward. Now, we don't have many of these, and as soon as I finish talking about this chart, we're going to just quickly go to a brief commercial break. But what I want to show you on here, well, even go back a little bit more. Let's just go out 20 years, is that the Russell PPO doesn't go negative very often. And so the problem here is it's pulled back and rallied back up and then failed. And this is kind of what happened in 2007, 2008. So in 2007, it pulled back, tried to rally and then failed. Up here, tried to rally and then failed. Uh, Here it rallied right out of the hole and kept going. That's very bullish. Now, what we have um, here is it broke down pretty hard, but then it kept going, and every time it kept bouncing off zero, and that was very bullish. This 2014 dip in September was kind of a problem where it dipped down and then took back off again, made our final market high here, and then started to break down. But again, each rally was lower and you started to have these big downtrends. Well, we've been living with this downtrend for a while now. It's going back almost a year and it's starting to roll over. So, with that, we're going to cut to commercial and then go into a few individual sectors to pay attention to.
The Chartwatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the Chartwatchers newsletter.
Okay, we're back. And what I want to cover off now is the banking and the brokers. And the reason I want to cover them off specifically is because the brokers are typically a leading index, helping us see when markets are going to start to break out. And they've been working hard to try and do that for us. So I want to specifically highlight that. But what you can see on the banking here is we, kind of ran up, and I think we all remember JP Morgan had great numbers, got up here and hit a high, and it was right up against a resistance level, and we'll see it on the next charts, where it had to get through and it couldn't. And you can see we continually try here and fall apart. Now, this is the broader index, and most people will trot out the chart of JP Morgan, and it broke out to new highs, and it's very bullish. I would agree, and that's the leading chart in the group. The bigger thing for me is that the whole group struggled to try and go higher, and these little candlesticks make it intraday highs. So they pushed up and yeah, it did make a higher high. So that was good. The problem is whenever you're testing a prior high, you need to pay attention to how the price action is working. And what we see here is on every one of these attempts, we were making lower highs in momentum. Well, now we fell apart when we went below zero. So that's a bigger issue. On the broker dealers, obviously, this is thinly traded. And so that's why we have all of these speckles. And I could use a solid line here, but you get the idea. And now we're dripping significantly lower today. Looking at the daily view, what you see on these banks, of course, is this level that we just haven't been able to break through. And the scooter ranking tells us that this still isn't a strong sector. Now, we had this big uptrend going in the broker dealers, and we can put a line off the bottom here up through here, and we're breaking that now. But one of the concerns we have on the broker dealer, and I'm going to show you on the weekly chart here, is that we made our highs, back in 2018. We still haven't broken out, and there was a major horizontal resistance here that we just tried to get through, and I want to call it, let me just, I want to call it 62, 63, $64, right in that range. And you can see that we surged up, and as soon as we broke out, we made it up for 1 week, and then we've spent 3 weeks going sideways, and now we're dropping back below the 10-week or the 50-day moving average. And so with that, that's a bit of a problem. Now let's go look at the momentum chart, and what we see here is typically on a head and shoulders top, what you should see is you should have uh, a large volume accumulation on the left shoulder, then a volume accumulation on the head, and a volume accumulation on the right. Sometimes you'll get a drop in volume on each one of those. So this one is the biggest, then this one has the next least, and then this one has no volume. I would suggest that that's what this chart is trying to say. We have lots of green candles over here. We have a lot fewer green candles here, and we have no green candles here. But look at what's happening on your momentum. You're dragging down and you're starting to just come up to an area where you expect to roll over. So if we draw some trend lines on here and just kind of lay that in there. And again, what we're trying to do is get this is a 3-year trend. So, let's not pick exact levels, but let's talk about the general trend. And the general trend was that we had a PPO wave that was very high, another PPO wave that was very high, and we stayed above, this 2% level here. We pulled down, and now we went below zero. And one of the things I like to talk about on the PPO is when you get your first move below zero, your next move could potentially be a final high. Well, if I just draw this as uh, as a head and shoulders neckline, then we would have something like this. Maybe I should pull it down, maybe I should push it up. Um, Either way, it's still telling us that we've got a lot of weakness over here on the right hand side with absolutely no volume coming to the rescue to kind of kick this off. And what we saw back in 2017 was this big enthusiastic jump, and then we went up, and then the market really started to run. And this was a huge run for the banks. And so as they ran forward, that was really positive. Now, what I would suggest is happening on the backside of this is there's no enthusiasm for this. And we've gone below zero. Now we're coming up. If we start to top out here, this is a pretty critical place on the chart. Now look at relative strength. This is when the banks or the brokers were outperforming the S&P 500. Since then, we've been underperforming, and that's been going on for a year and a half. Now I'm just going to save this chart. IAI, and I always like to use today's date. And again, I put it in a chart list with all of the charts that I've been saving over the last couple of months, and just maybe show that to you as this chart fills in. But every ticker symbol, so you can see this is all the times I've saved a chart of gold, and this is roughly since May. So they're all piled in here, and then as we work down the list, just keep adding them up. So anyway, you can always quickly go back and have I saved a chart of this brokerage ETF? No, but here's Jeffries, and I know I've had uh, other charts show up in here regularly. Here's Goldman Sachs and that kind of thing. Morgan Stanley's probably down there too. So investigating the individual groups, but seeing this breakdown here is a pretty crucial thing. Now, more importantly is let's run this out, bigger picture. What I want to talk about here is what you see happening is this downtrend in momentum. Whenever we get this downtrend in the brokerage, that's not very helpful. And what you see in 2013 was this big downtrend broke. And don't forget, this was quantitative easing coming in. So this was the uh, all of the central banks worldwide saying we're going to make this party start. And sure enough, they did. And this broke this huge downtrend in price. It broke a huge downtrend in relative strength, and off we went. Now, all the way through 2014-15, QE went all the way to the QE infinity, went all the way to the end of 2014. And even if we draw an uptrend under here, we're still above that uptrend line. The point I would make is, it looks to me like we're going to roll back over going below zero. And when that happened back here in 2015-16, the overall market pulled back. And what I'm worried about is the fact that nobody's showing up for work on the bid side of this right now. So we're looking for that negative divergence. We're getting it. The market, back here we had highs, lower highs, lower highs. When we finally fell below zero, that was kind of July, going on to the October high in the stock market, and then down we went. And that was a major financial crisis. And I had a debate with a friend of mine the other day, and he said, Greg, there is no financial crisis on the horizon. And I said, no, there's no big US bank that's got a financial crisis on horizon. There's lots of them if we just want to look outside the US market. So when we look at all of these charts, perhaps the US market is the strongest market, and I fully agree with that. I think what's more important is that these other trade imbalances are starting to set up. So Japan is having trouble, Germany's having trouble, Italy is the chart's breaking down, Spain, the chart is breaking down. And so when we see all of these charts starting to crack as a group, it's probably a big deal. So so to get back on track here with the overall look, this was copper, and we'll watch to see what happens where our Friday close is. But this is the 3-year uptrend, and I wrote a "Don't Ignore This Chart" article about tech resources this morning. This is a pretty big deal, and having this big major topping structure on something as important as copper is is important for a number of reasons. We like to call it Dr. Copper, but it hasn't really affected the US before. But what we see here in copper back in 2011, 2012, 13 was copper has been on this big downtrend. So now we rally back up and now we're starting to roll lower. Again, the rest of the world, I think, is where the problem comes in. And then we'll have to watch and see if the central banks come to the rescue to kind of, get the party started again, or do we actually get a trade deal that gets the party started? Um, what would it take? But the bottom line is copper demand is telling us we're just really not getting it done. And this looks to me like it wants to go lower. Okay, so when we are analyzing the market from a bigger picture perspective, we also have this group called industrials. And one of the reasons that we need to cover that off, and I mean, we could spend just a whole hour on the bonds right now and how they're moving, but this is the XLI for a weekly, and I usually show it as a line chart. I put it in as a candlestick chart just for today. And the reason I want to point this out is you notice here we broke to a new high and then immediately switched to a lower low, and so this is your big outside bar. This was almost an outside bar here, and so you have this wobble up near the top and then you break down, and up here we have this big push and we try to get above this prior high, and in this case we did it by 9 cents and then we fail. So always watching when you go through a prior high. Up here we try to get through this prior high. This is April, and then we start to roll back down again, struggling to get through. So this was 73 cents, this was 61 cents. Again, the level comes in. So then here we get up here and we briefly break out and we pull back, and now we're breaking down again. Some people will say this is a head and shoulders bottom and we're now about to start soaring to the moon. Well, I think exactly the opposite. And the reason is because we have declining trends in momentum. We had a high in April. Now we're making a lower high. We're below the 2% level. And this looks to me like it wants to start gearing lower. As this market changes, I think this is an important chart. And I've mentioned the railroads before, but they're continuing to do what we expected, where they're starting to break down. And this relative strength level here that finally broke was giving us a clue. And the same thing that I had on the broker dealers about talking about we've gone below zero. This could mark the next high as a final high. So we're going to come down and wobble our way down here for a while. When we do that, I don't know if it's as big as 2015-16 or if it's even bigger than 2015-16. I just know that we're starting to look like we're breaking down, and the sectors across the groups are all breaking. So it's not just banks, it's not finance, it's not broker dealers, it's industrial metals, it's in railways, it's actual industrial companies. All of these charts are starting to break. And if we go look at Europe, and I just want to put up the Nikkei for a reason. I keep talking about this, but it had an absolutely terrible evening. It closed down 450 points. And so we have this uptrend in the Nikkei that we're trying to hold on to. It's been struggling to sit around its moving averages, and it closed below 21,000 to mark the end of the week. Now, that doesn't seem that bad, but the problem is we're building this lower highs and lower lows problem out, and as it completes, that's a bigger deal. And this 21,000 level, if we just snap a horizontal line on this chart, again, it is a real concern for me. And I think the bigger issue we have in the world is that these other places like Japan, where they're having a lot of trouble with their growth, and we don't have a trade agreement with them signed because that one's been opened as well. This could mark a real problem for that chart. Okay, so with that, again, thanks for joining me on the Market Drudge this morning. It wasn't quite as optimistic as we'd like to be. Market Buzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern Time, 7:30 a.m. Pacific Time on StockCharts TV. You can also catch replays on the StockCharts YouTube channel or on StockCharts TV, which has a running list of charting informational shows. With that, make sure you catch my weekend show this weekend on the Canadian Technician. Thanks. Bye.